Okay, we're taking a look at the CompQ, which is the Nasdaq composite. I must remind everybody again, this is for educational purposes only. Well, we continue to power higher this past week, although on Monday we put in a doji, and it looked to me like, hey, this is about ready to turn back around, because that prior Friday, it wasn't a dark cloud cover, but it wanted to be. It was a wannabe dark cloud cover, and then we put in this doji, and then we powered up for a couple more days, and then we moved into today's action, which, if it wasn't a bearish engulfing pattern, it certainly was very close to that. And it was done on higher volume than we've seen in the last month or so. So once again, I'm looking for confirmation to the downside and some follow-through on Monday and Tuesday of next week, and to see if this thing continues to go back down. Now, what are we going to look for in terms of targets? The first area is going to be 2350, and the reason I say that is when you pull up a longer term chart, like a 5-year chart, you will see that there is some confluence and some market symmetry with a swing high from early 2006 and a swing low from 2007 that stop precisely at 2350. So it's not a surprise when a stock stops or stalls and it goes to a certain level, and maybe you're wondering why that happens. Well, maybe you can pull up a longer term chart and you will see things that you would not normally see in a shorter term chart. So that's the first area I'm going to be looking at, is 2350. Then this swing high here from mid-January at 2325. Then this gap that we see here and this little flag pattern could act as decent support around 2300. Then we have this area here. Actually, this little channel, this little box that traded in here, should act as good support as well. And then we have the area right here, the swing low at 2100. We also have the swing high from just below 2200 that was put in October. Okay, we have the stochastics that continues to be in the overbought area. It looks like it wants to roll over a little bit, but has not yet penetrated 80. And the MACD actually looks like it does want to cross over, and we have a bearish divergence in the MACD histogram. So with that, my feel is that we're going to retrace next week. Okay, so again, you want to see how the candlesticks are acting when we approach these targets. And if we break back through with some gusto and some continuing increased volume, then that's going to tell us that maybe there is some follow-through going on, and we could continue back down this way, and we'll just look for our targets. Okay, I want to remind everybody, trade carefully. If you trade with options, it might not be a bad idea to consider hedging. It's a very uncertain market, and you need to stay nimble and stay diversified, and certainly stay within your risk tolerance, and do your own due diligence. And don't load in to just one stock. You want to go ahead and use some smart portfolio management. Okay, so with that, and also paper trade. If you're doing new strategies, make sure you paper trade until you get used to making some money on paper before you ever put real money at risk. Okay, this is Mark Espy once again with Market Tamer and the Robinhood Trader saying good evening and have a great weekend.